So when Mr. Rakesh Jhunjhunwala invested in Titan, it was trading at 3 rupees per share, just 3 rupees per share. And now that same stock trades at approximately 1800 rupees per share. So in a few decades, Mr. Rakesh Jhunjhunwala has increased his investment amount, and now his total net worth in Titan is around 8,000 crore rupee in Titan alone, right? Forget about the entire stock portfolio, that is just mind-boggling. He has around 8,000 crore in Titan stocks. So the lesson from this story is very simple, that when you as an investor pick really good companies when they are small and you invest big amounts in it and hold that investment for decades or years, then you can become extremely rich like Mr. Rakesh Jhunjhunwala. Now this is the same philosophy with which Mr. Warren Buffett also operates, Benjamin Graham, Ray Dalio also operate. So understanding how to identify good penny stocks or good small companies is a very important skill. So please consider this video only from educational purpose. So I am going to show you 3 specific penny stocks that I am keeping a track of. I'm not saying I'm investing, I'm keeping a track of. For now, these look really good to me. I'll continue to monitor how these are going and I'll share updates with you. So please stay tuned till the end of the very video. And towards the end of the video, I'm going to tell you why did Mr. Rakesh Jhunjhunwala actually invest so much money in Titan early on. So that will act as a very important lesson. So let's get this video started. So just to kick things off, let me quickly explain what penny stocks are. Now, penny is essentially a money denominator that is used in the US. So we consider penny stocks as stocks that are trading at a small fractional amount, right? So that is what penny stock means. And these are usually reserved for companies that are very small in nature. The businesses are very small. They have great growth prospects. So let's understand this from an example of Titan itself. So as you can see that back in 2000s, early 2000s, Titan was trading at 3 rupees, 4 rupees, 5 rupees, etc. And now, like in the next 20 years, it has gone up to 1840. So that is the trading price today. So in a span of a few years, Titan has given massive returns. It has given approximately 24,625% return. So that is the return from which Mr. Rakesh Jhunjhunwala has massively profited. So if you can identify really good companies early on, so back in early 2000s, Titan was literally a penny stock, right? It was a very small business. It's not as if that it was displaying massive profits. It has stable cash flows. But Mr. Rakesh Jhunjhunwala looked at certain things, made the investments, and he reaped benefits out of it. Now let me quickly clarify the definition of penny stocks. So in the US, penny stocks means that these are stocks that usually trade at $5 or less. That is the general consensus. There is no set definition of penny stocks per se. In India, if you extend that definition, it will apply to companies that are small businesses or small firms, and this is typically less than 5,000 crore. Right? You will say that here 5,000 crore is a huge amount, so how is this a penny stock? No, so essentially what it means is that the size of the company is small, so it is growing from a small base. So back in 2000s, early 2000s, this is what Titan would have looked like. Very small company. Over the years, it has become like this, right? This big. So it has grown. So the point that you need to take away is that rather than getting fixated on the exact definition of penny stocks, you must consider these as small cap stocks. And you must understand certain features of penny stock. The first and foremost feature of a penny stock or a small cap stock is that they have great growth potential. Very similar to the way it happened for Titan. Other small cap companies exist in the market right now. If we bet on those companies right and sit tight, we will become super wealthy. So this is the first feature, that they have great growth potential. Now with great growth potential comes great risk. So there is a lot of volatility, that the share prices will go up and down, so on and so forth. So even for Titan, you can see that during this entire phase of approximately 4 to 5 years, the stock did not do much, right? In fact, it stayed almost consistent and it did not give any massive returns. So this is the second key thing that you must be okay with, that there will be a lot of volatility in terms of investing in penny stocks or small cap stocks, and you have to stay put. If you have made your decision that, hey, I'm betting on this industry, betting on this sector, if I'm betting on this industry and company, then stay put. Otherwise, you're not going to get returns. The third feature of a penny stock is that they grow with economy, right? Now, this is where I'll give you the answer that why did Mr. Rakesh Jhunjhunwala invest in Titan back in early 2000s. So in early 2000s, Titan had 2 divisions. One was called as Time Division and one was called as Jewelry Division, right? The Time Division was giving massive business to Titan, and that was what people were betting on, that hey, the Time Division of the company will grow, and they were valuing Titan from that angle. But Mr. Rakesh Jhunjhunwala thought that, you know what, the jewelry business is growing and it is going to go up as India progresses because people have this affinity to buy gold, jewelry. Tanishq also got established during that phase, and that took the jewelry business of Titan to the next level. And over the last 2 decades, Tanishq has been a massive growth story which has benefited the entire Titan stock. So Mr. Rakesh Jhunjhunwala was not betting on the time component or the watches component of Titan. He was betting on the jewelry business. Why was he betting on the jewelry business? Because he linked it to the Indian economy. He said that, hey, I'm very bullish about the Indian economy, especially around the jewelry sector. He made investments in Titan, massive investments in it, and now he is benefiting. So similarly, you and I as investors, our lesson is that we must also be on a lookout for such investment opportunities. Now, let me talk about 3 specific penny stocks that I am keeping a close track of. Again, this is not an investment advice. I am keeping a close track of these stocks. I am going to buy it. One of the stocks I had already bought, sold it. I am going to re-enter again after a bit. So I am going to talk about 3 stocks. So let's get started. So the first penny stock that I am bullish about is called as Manali Petrochemicals. Now before showing you what this company does and what are its financials like and what are some of the good things here. Now the share price is trading at 92.65 and it is a small cap company. Have I bought this stock? No. I'm just keeping an eye out for it because a lot depends on how things progress. So let us quickly check the financials of this company. So you will see that the revenues have been growing for this company, and this is what I love to see, right? That the revenues, especially if of a penny stock is growing, it shows that, you know what, the promoters or the management of the company is probably good. They know how to grow the revenues. Now, are they doing it profitably? So let's take a look at it. So it seems like it that, okay, hey, the revenues have grown from 57.89 in 2018 to approximately 4x, right? 201 crores. So this looks good. So the company itself seems to be fine, right? So this is a check mark. Now with small cap companies, you must be very considerate about the debt that these companies have and in which environment they are operating. So if the macroeconomics or the industry of the company looks bad, then please do not invest. For example, if you feel that, hey, these days the traditional automotive companies, right, automotive companies are going to go down, that because of the internal combustion engine or the energy needs that we are moving from non-renewables to renewable sources of energy. So if you have companies that manufacture scooters and there is a new company that is manufacturing traditional scooter, it might be profitable for now if it's a small case company. But in the long term, the industry seems bad because a lot of move is happening to renewables, right? You can check my EV case study here. That will give you more insights. But bottom line, you must understand that both the company should be good and the industry should be good, right? If the industry is not doing well, then most likely small cap companies are going to do poorly in that particular industry. Please keep that in mind. And if a small cap company has a lot of debt, please be on the watch out. And more importantly, this debt can be very volatile. Sometimes small cap companies take on a lot of debt. Tell me why. Why would that be the case? I'll check your answers. That why is it that in percentage terms, small cap companies take a lot of debt compared to large cap companies? I would want to read your answers in the comments, so do comment. So moving on, the company needs to be doing well. That's one. And second, the industry needs to be doing well. Third is that we need to keep a track of debt that the company is taking and the news items. That's again very, very important. So let us do these few things, right? So let us just quickly take a look at the company analysis. So I showed you that revenues and profits are fine. There is no massive bad stuff happening. Now here is something that is going off, right? So it is in the ASM list. So we need to understand what ASM list is first and foremost. Now I'll probably make a separate video on this. Let me know. Now this is not a bad thing, okay? Sometimes what happens is, so I'll show you an example, right? So there is a company called as Graphite India. Now back in 2017-2018, it was trading at approximately 100 rupees. And by 2018, less than 12 months, its share price became approximately 1000. So there was massive return, right? Now, whenever certain companies have these type of massive spikes, for whatever reason, right? NSE and BSE get suspicious, they can put them on ASM list. This is one of the reasons, not the complete reason. I'll make a separate video because otherwise the video will become long. But bottom line, I hope you understand that getting a company put on ASM list is something that's an indication to the investors that please be on a watch out. That's it. That's what it means. It does not mean that, hey, the company is bad and it will go bankrupt, right? So in Graphite India's case, you can see that, hey, the stock price did come down and then it has started going up. So it's not as if that the company went bankrupt. This is one of the key features that I love about Tickertape, that they tell you all these specific points and you can keep a track of news, finance, everything, right? Now, if I want to read more about Manali Petrochemicals, right, then all I need to do is that I just need to go and scan through the news section and all the articles will be linked. So I can follow along the news very easily. Now, coming back to the financials, let us look at the quarterly results as well, because that will give us an indication what the company has been recently doing. So as you can check that even the sales, quarterly sales have been increasing, operating profit has been increasing. It is posting its highest ever profit before tax. The net profits have been on the rise. So overall, the company looks solid to me. And let's just quickly check the debt to equity ratio also, right? So the debt to equity ratio is relatively small. I think it's fine, not a big deal. 2% debt for a growing company, it looks okay to me. So overall, this is a solid company. Am I buying it now? The answer is no. I will do further analysis on it. So as the first piece of analysis, I will analyze what industry is Manali Petrochemicals in. The name itself suggests that it's in petrochemicals industry. So let's just quickly go through it. So what is it that it is doing, right? Now, Manali Petrochemicals has clients across all these different domains: paint and coatings, general insulation, footwear, construction, automotive, appliances, whatnot. It is just there everywhere. It is a raw material provider of petrochemicals to different industries. So for a company like Manali Petrochemicals, which is into manufacturing of petrochemicals and supplying it to other industries, essentially it becomes a type of an industry which will grow with the GDP. Today, we are sitting at 16,000 Nifty. In the next 3 years, do you see Nifty reaching 20,000 or do you see Nifty reaching 12,000? I would bet a lot of money on Nifty reaching 20,000 rather than 12,000. So with that, the entire economy will grow. Now the economy needs raw material to grow and companies like Manali Petrochemicals will supply it. So that is how I am thinking it. I will do further analysis on it and keep you abreast. This is one specific small cap or penny stock company that I am looking at. Now the second key interesting penny stock that I have picked is called as Delta Corp. Now this is a screenshot of the trade that I have already made. I made approximately 2,41,000 return on this investment within a few months because I was quite bullish about Delta Corp, and Delta Corp, I'll explain what it does, but this is a stock that is held even by Mr. Rakesh Jhunjhunwala in his portfolio. So he is betting big on Delta Corp as well. So this again seems to me like a good penny stock to consider. Now let us very quickly take a look at what Delta Corp does. So Delta Corp Limited or Delta Corp is the only listed company engaged in the casino gaming industry in India. So a few days back I was in Goa. I've told this story multiple times. So I could see the interest that people have in going and playing games, casinos. Now what Delta Corp simply is trying to do is that it is trying to create a gaming ecosystem in India. So they are running and operating casinos in Goa. They are also, what they are doing is that they own this company, Adda 52.5, which is an online gaming company. Now they can mix and match this offline and online gaming, make it really big, and if you take a look at one of their business lines, it's hospitality. They are expanding into 5-star, 4-star hotels. So as the travel industry picks up post the coronavirus, I think companies like these will grow big, right? So that I'm just waiting for coronavirus and I'm going to invest my money again in Delta Corp. But let us quickly go through some financials, right? Because this will give you a sense why I sold the stock, right? So if you take a look at the financials, it looks a little troublesome, right? So in 2018, the total revenues were 637 crores. It has come down 454 crores. The company is running at a loss. But again, as I said, that this is an entirely gaming based operations. People right now just want to survive because of coronavirus. They are not interested in going out, partying, taking holidays. Now, once the situation improves, I am quite confident that this stock will bounce back. So I'm just waiting for positive news to hit. The moment it hits, I'm going to reinvest in this. This is my analysis. Please do not follow this strategy. This is just for educational purpose. Please do your own due diligence. So let us very quickly take a look at the overall stock prices as well for the last 5 years. So I'm quite confident that the stock should hit 345 mark, right? And it has been climbing up. It fell massively during the pandemic. That is where I bought it and I sold it, right, when it attained a certain height. So I'm quite confident that as the travel industry opens up, stocks like VIP, stocks like Delta Corp are going to perform very well. So when am I going to buy this stock again? So see, so this is the 200-day moving average. I have shown you this strategy before, that right now it's trading at approximately 180. My assessment is that it will at least go down to 168, 169, 170-ish levels. I'm going to buy a little quantity there, or I'm just waiting for the stock to hit this 200 DMA. that is when I'm going to make massive purchases in this stock, and hopefully I'm going to become an iota of Mr. Rakesh Jhunjhunwala. So if you like this analysis, press the like button and we will move on to the third and final stock for today. Now the third company that I'm going to talk about, it is called as NHPC Limited. This is a government owned entity. It comes in mini Ratna, right? So the company size is not very big as of now, therefore penny stock, small stock. Now it is an Indian government hydro powered board under the ownership of Ministry of Power, right? And essentially, now this is a very important point that you need to keep in mind, that from hydropower you would just assume that, hey, you know what, okay, they will just build like water based electricity and that's it. But no, later on NHPC expanded its objective to include other sources of energy like solar, geothermal, tidal, wind, etc. So this is a good energy company to consider. So let us take a look at some of the financials. So let us take a look at how the company has grown in the past. So it trades in a certain range, right? So that is what has been happening since the time the stock got listed in 2008-ish, 2009, 2008. It has been trading in a range. Good thing about NHPC is that since it's a PSU, it gives a lot of dividends. And can anyone guess how much dividends this gives? So this gives approximately 16% dividend. Now do let me know in the comment if you would want me to make a video on dividends, and should you be buying dividend based stocks or should you be buying growth based stocks. But 16% dividends, it's massive. So this is very lucrative, that's one. But you should not buy stocks for dividends. You should rather buy stocks for its growth prospects, the way Titan grew. So hopefully our portfolios will also grow that way. But it's a good lucrative thing to have, that if the company is paying 16% dividend, that is massive. So let us just check some of the other key things. So honestly, all the factors look fine. So let us look at the financials. That has the company been growing, because it's a PSU and PSUs are usually laggards when it comes to growth. So good thing is, despite the pandemic, despite everything going around, the company has maintained cash flows. Explain me the reason why, right? This is a very interesting question that I have for you, that why do utility companies, it's essentially a utility company, why is their cash flow stable, right? Even their dividends are going to be stable. So answer it in the comment box, that why are the cash flows for a utility company stable? So the cash flows have been stable, the profits have been stable. So it seems like a very stable company. Now what can you conclude? When you see this chart, you can conclude that for a stable cash flow company, so the stock has been trading at 26, and usually it has been trading in this range, right? This range to this range, right? This is the support and resistance, so to say. If we take an overall support and resistance, then I am going to assess that it will go up to 32.45 at a certain stage. So am I going to buy the stock here? No. So I'm going to wait. I'm going to see. I'm going to monitor. If it falls below, because this was a great support level, so I'm going to probably buy the stock somewhere here. So this is where I'm going to make the first tranche of investment, and this is where I'm going to make the second tranche of investment. So I hope this point is clear, that I'm going to play a support and resistance game with this stock, because the stock is stable. It's a utility company stock which has shown a consistent cash flow. So I don't think that is going away. And second, the dividend income from this stock is high. So if I get this stock at the right price, I will definitely be a buyer in this stock. But having said this, please consider this video for educational purpose only. Please do not take my advice as investment advice. Now, before you drop off, please listen to this section very carefully. This is extremely important. I'll just make 3 very quick points. 1. If you are looking to invest in small cap stocks, please play the economy game, right? Please do not assume that, hey, in a falling market, I'll identify like a great company, and even if the economy tanks, it will still survive. No. Small cap companies get hurt the most, and in a growing economy, they grow the most. So here is a paragraph that I'll read out for you. And I've taken this from Kotak Securities website. What makes small cap companies risky is the low probability that they will be successful over time. This makes the stocks of such companies volatile in nature. Small cap companies have a long history of underperformance, but when an economy is emerging out of a recession, small cap stocks often prove to be the outperformers, right? This last line is very important, that when the economy is coming out of a recession or a major crisis like coronavirus, the small cap stocks can outperform the economy. So recall the Titan example, that Mr. Rakesh Jhunjhunwala bet on Titan, not because of the time or watches division, but because of the jewelry division of Titan. He felt that that part of the economy is going to grow and become massive. He bet on India's GDP and India's affinity with gold and jewelry products. That is what gave him massive returns. So I see a similar situation being played out for something like Delta Corp. Therefore, I am most bullish about that stock. So if I have to put my money on one of these 3 stocks that I discussed, it's going to be Delta Corp. The second key point that you need to know is that please revisit the fundamentals. Please check Tickertape follow the news section. Very, very important, because the news get manipulated. I'll speak from my own example. This brings us to part 3, that my grandfather invested in a company called as JVG, right? It was a old company. I was very young, and he lost a lot of money on that company because these small cap stock news are manipulated. It works like a multi-level marketing scheme. So what that means is that if Akshat speaks with the person who is watching this video, so let's call him Mr. Rahul. So if Akshat speaks with Rahul and tells him, I bought this JVG stock for 100 and within a month it became 150, then Rahul will go and speak to Saurav and he will tell that, you know what, Akshat told me this tip, I also bought and now the stock price is 200. What will Saurav do? He will go and buy the stock. And then this keeps on going up and up and up, and a kind of a bubble gets created and it eventually pops. This has been manipulated by news because for a time period, let's say for 1 year, good news will only come about JVG and whichever company you are looking at, and even media. We know, I don't want to say bad things about media, but a lot of things are manipulated in the media. So please do your own due diligence. The important point is that with small cap stocks, the news is manipulated a lot. So in my case, why am I betting on Delta Corp? Because I myself have gone to Goa. I have seen how people are crazy about playing games in casinos. So that comes from first-hand experience. That's not media telling me. I'm myself observing it. Therefore, I'm bullish about it. So please do your primary due diligence. Final point is that Mr. Rakesh Jhunjhunwala, Mr. Warren Buffett, they are big sharks. They have a certain style of trading. They have resources. They can send people to go figure out, do an analysis of how many people are visiting these casinos. Then they will build their valuation models. We don't have that kind of resources. We have to be smart in terms of getting in and out of stocks, and we have to play safe. Therefore, keep observing news and financials for small cap investing. So I hope you enjoyed the video. Give it a thumbs up and I will see you the next time.